Hi, everyone. Welcome to the Top Lessons podcast. I am your host, Kathy Inglot, and with me today, I have a very special guest. She is an incredible woman, founder, and managing partner of Fusion Fund, and her name is Lu Zhang. Lu, welcome to the show. Thank you so much for being here.
Yeah, thank you. Thank you very much for having me, and Happy New Year.
Happy New Year to you as well. So, your introduction is quite simple, but there's so many accolades behind your name. You are a accomplished entrepreneur, investor, and a leading woman in Palo Alto. And with that come many other honorees of Global Leader by Economic World Forum, Silicon Valley Woman of Influence, Best 25 Female Early Investor, featured honoree of 30 Under 30 by Forbes. I mean, I think we can name a list for the next 30 minutes, but I will leave it to my audience to read your bio later and look at the accomplishments. But one of the things I want everyone to understand is Lu just didn't have success overnight. She has had much hard work in this space, and this space is obviously AI and entrepreneurship and venture capital investment. But I'm going to let her tell the story. So Lu, if you can start off with your story of you are literally a first generation immigrant, originally from Inner Mongolia, that made her way to Stanford and now to Palo Alto as a venture capitalist investor. Can you tell us a little bit more about yourself and how that started, from why Stanford Engineering and why venture capital?
Yeah, so thank you very much for the introduction about my background. I 100% agree with you. I think it's not only for me, for most of people, when you read their bio, of course, that's a highlight of our life. But on the other side, there's lots of process and lots of hard working, lots of the decision to be made in order to become who we are nowadays. And I think for me, the first decision I made was decided to come to United States for my graduate school. I love my hometown. Inner Mongolia is very beautiful places. I'm a foodie. We're proud of our culture and also our food. However, if you talk about the technology innovation, which is my passion since I was a little kid, I think here is the best place. So I think I made the right decision. I came to United States and came to Stanford for my graduate school. And I was a nerdy researcher in material science and engineering. Most of people even don't know what is material science engineering. It's a very nerdy subject, but also for me, it's a perfect fit. I was doing lots of the research on different sensor, carbon nanotube, also things people probably more familiar with, like lithium-ion battery, multi-junction solar. All of this research really built up my foundation of understanding for technology and also passion for tech innovation, and start to realize how big the impact you can potentially contribute to leverage tech innovation. And Stanford is a very unique ecosystem. I got very lucky embedded into this ecosystem and got motivated, got inspired. And thanks to my naive and young at 21 years old, if I know that better, I probably would be hesitant about whether I become an entrepreneur myself. But when you're young, you thought you can do everything.
Yeah,
So I
for
started a
sure.
company, became an entrepreneur. That's kind of my initial journey. Also, another decision I made, instead of continue my PhD, eventually become a professor, which make my Asian parents proud. I
Oh, very.
decided to become yeah, they're still not happy nowadays, ask me when I'm going to go back to finish my PhD, but my advisor already retired. I don't know what I
Ah,
can do. I got a master though. I still got a degree. Otherwise, the Asian parents
I'm
will be
sure
like, "Yeah,
there's,
go nuts."
a doctorate
Um,
honorary.
yeah. So that's kind of really special journey. Being an entrepreneur is tough. It's hard. I kind of not 100% joking. I told my friends like, life of an entrepreneur is miserable. It's a miserable lifestyle. You're kind of entrepreneur as well. You probably partially agree with me.
Yes.
But on the other side, it's such a rewarding journey of personal growth. I grew so much in the couple years I was running my company. After exiting my company, I was facing another decision: what I want to do, continue to be an entrepreneur, or maybe explore other opportunity. I got a chance to put in personal money as an angel investor into a couple of the founder friends I know. I got a couple IPO, I got some good exit. And that's when I started learning, okay, you could find another approach to be a supporter. I'll be part of the technology innovation, but my personality is I'm full of curiosity for all different type of innovation. Not only the technology I'm working on, but also other tech people are working on. I love to work with the smartest people. Then I found venture capitalists is kind of the perfect job for me. So
They
in
come to you
2015,
now,
that's when
right?
I
Instead of
start
you coming to them,
Fusion
they're
Fund.
coming to you.
Yeah, this year is the 10-year anniversary of Fusion Fund. We have now we have a fund for set up, and we're about to do the announcement of the fund for soon, early this year, and we have close to 100 company in our portfolio, and also we've been investing healthcare, enterprise AI, and industry automation since 2015. So I know AI is a buzzword. We've been doing that for a long
Yes.
time.
And
Yeah.
I was just going to mention that, AI is obviously the sexy name everyone has been hearing for the last year or two, but you've been doing this, like you said, for over 10 years. And I think one of the maybe the misnomers of AI is that it's just, more efficiency. But I think, you're looking at it from the productivity perspective, right? And you're saying, what can productivity and efficiency do together in these platforms, whether it's medical background, healthcare, pure AI, like you said, the world of AI is ever expansive, right? It's coming from every part of finance to healthcare, you name it. There's an industry that is looking at how to innovate with AI. But you're at that other cusp of the formula where you're saying, how can I help invest in companies where the growth opportunity exists? And I think you've been featured on CNBC. You've spoken many times about what you do in Fusion Fund. But what I love about you and your approach is that you just don't do a one-time investment. You are there for the growth of the company, and you will go in and help more as the rounds go forward. So you're just not investing in seed, you're going into the actual series later if needed, and you're there for the ride and for the exit. So a little bit of, obviously, how Fusion Fund was created and your journey through that story. You've created 4 funds now, and last time we spoke, you told me you had that decision. Now you had to turn away money, which is what many people would love to have as a problem. But where do you think is that right partnership, and who you have bring money to your fund, and what makes that person a yes to you?
I think you partially answered that already, because we kind of using similar approach our thinking process as when we're looking at founder, which type of founder will take out money, how founder really see us. They probably want to fund an investor could become their long-term partner. Yeah. And also understand their vision, and also understand the value of the technology they're building. Same thing for us. We're looking at an investor who really could be a long-term partner for us, have strong passion and vision for technology innovation. And we never touch consumer innovation. All the company we invested are technology savvy, B2B. And they're more kind of solid solution, and also require lots of understanding of the tech itself and also the industry. So that's also kind of thing we're looking for from the partner and also from the investor. I think it's all about align the value and the expectation, right? When you want to fund a partner to go along, fund is like 10-year fund minimum, how to really go through this 10-year journey. And nothing will just go smooth, always go up. There will be things happening, including, microeconomy. It's out of our control. Geopolitical issue is out of our control. When we're in this world with lots of uncertainty, you want to have partner that align the long-term vision with you. So that's kind of how we really pick the partner we want to work with. Luckily, we're very fortunate, especially last year, the market was not good, but we very quickly got strong support from the investor. And also we have a pretty nice diversity. I'm a true believer of diversity is critical to innovation, but also diverse background investor and partner is also beneficial to us. So we have basically all different type of institutional LP. We also have family office LP who have a strong technology company background as well. And of course, 80% of them are still based in the United States. We have couple from Europe, from Singapore, from Canada also be able to always exchange a note with us about what is happening in terms of a global side and how we could really understanding outside the United States where the world is heading to. So in general has been a great journey. Besides the 4 flagship fund, we also have a couple opportunity fund we set up in between. It's a great practice in terms of, as you said, we want to be a long-term partner for the founder. The initial beginning of the seed and pre-seed, the small check we put in there, will still most of the time be the lead and take a major ownership, but we'll still, want to use as a starting point and continue to support them. I would say that, yes, it's part of our investment strategy. It's also personal interest. As I mentioned, my interest, my curiosity is not only just put a check, let company do themselves. We want to be part of it. We also build up really robust network community. As I mentioned, most of our company are doing B2B and they're doing corporate sales. They need to connect to the large corporate in order to push their revenue growth, commercialization. And AI is accelerating everything. And we have a really robust CXO network leading by one of my partners who is a former Fortune 500 C-level. Now we have like over 40 C-level, mainly CTO in our network. We could directly make contract happen faster for our founder. That's our add-on value. It's not only just money.
That network, right, is what I think many people need to realize that they need to have if they haven't already, right? It's success can't be by yourself. You really need to be a team to have success. And you may have success by yourself. It's just it may be limited as to what kind of growth you'll see. Now, I love one of the things you've said previously in other interviews where you've had this comment where you've said valuation is an illusion. But I know working with many CEOs now in the top lessons, format, they are very much eye on valuation. Can you elaborate a little bit more into why you think valuation is the illusion and why that can't just be the main point someone is stuck on or can't get past?
Yeah, so I still say that valuation is an illusion. And recently, you probably heard more news of this super early stage company with a little out zero revenue getting crazy high valuation. Yeah. I keep getting friends asking me, is there a bubble right now? I told them AI trend is real. Digital transformation is truly happening across all the industry. It's not only just for the tech sector. As you mentioned early on, we can see AI be a super powerful tool to help us handle this overwhelming data. And lots of the industry have high quality data, be able to train the AI model and essentially build up super efficient application. We saw that revenue growth with our portfolio company already. So I think AI trend is real. But definitely there's a bubble with valuation and with capital because we have too much capital rushing to this trend, which to be honest is not the first time this type of thing happen. When we have a technology trend and new innovation coming in, it will attract tons of capital coming in, and it will be some capital got wasted and some capital overvalued. This is the process. But valuation, essentially become, sometimes I worry about that founder, as you said, only eyes on the valuation. I'm like, why we set a valuation for the company? Most of the time, especially for early stage company, valuation is not necessarily the metrics representing the value of your company because you're still early. You haven't generated too much revenue and validation yet. Valuation is approach for us to calculate the dilution. Yeah. So the key metrics really matters is the dilution. When I sold my company before I started Future, my ownership was 72%. I don't have a very high valuation, but ownership really matters. Help me with negotiation power and potential good financial return. Same thing for our other top founders. I think the good founder always focus on, okay, how I maintain my ownership. And also as my ownership numbers make sense, the dilution number is within the range. Valuation number is just the approach. But if just only try to optimize the valuation number, especially at early stage, there are lots of consequences. When you have zero revenue, have a super high valuation. After you close the round, your goal is to catch up to your valuation to justify that. And even you work so hard generating some revenue, your revenue just catch up to your valuation. That's when you start to think about raising next round. Then the next round, people are thinking about a higher valuation, expecting a higher revenue.
You're in that circle.
That's when we see tons of down round happening. Yeah.
For sure. Now, for someone who's done her own exit and now is part of many other people's exits, what do you think is the success between, or the lessons, I should say, that have enabled you to succeed to an exit? I know there's many companies, and I only ask this specifically because I have a lot of people that actually asked me to ask you to say, look, she has this immense number of companies that she's a part of. Like, very few people can be a Lu. And they're like, what has been her kind of macro view of the lessons of success she has seen that have enabled these exits? Like, what's the common theme of success that you have seen, the lessons that enable people to be really successful to actually get to an exit?
Yeah, I think first is really focus on the core foundation of the company, which is the revenue growth. That's a validation of the market, or that's a strong foundation regardless of what is the founding market. Sometimes we see founder with a company start with a high valuation, and then the founding market start cooling down, and they start to suffer from not able to raise money for company to continue to even survive.
Yeah.
But if you really focusing on the foundation of the revenue growth, that's when you gain your own power. We have a couple companies, they haven't raised since 21, 22, revenue approaching $100 million. They have consistently the VC knocking the door, like, when you're going to raise your next round? And they came to us, like, saying that, Lu, when you're going to talk to your founder to raise next round, then you got to pick whose money to take, who is your long-term partner. So I think that's really number one thing. Focus on the practical core foundation of the business is market validation and the revenue. That's a much more important metrics compared with the valuation itself. That's how market really react to you. I think the second thing is really be practical about what is the exit. I understand IPO is a milestone. Everyone want to have an IPO. List your company in NASDAQ in New York State and ring the bell. Sounds like amazing.
The American dream,
However, not necessarily IPO would always be a better exit channel. I was talking with the founder. They got over $1 billion merger acquisition offer. And meanwhile, founder still thinking about potential IPO. I'm like, do a quick math. If your IPO, probably your valuation is around $1 to $2 billion. And this is a small cap company. Yep. Are you confident that analysts going to cover you?
Yeah.
Be able to attract, your IPO is also main goal is for fundraising and exit. And also, there's a lot of changes on the stock market right now, and lots of uncertainty, etc. And also, fundamental question I want to ask you is: do you think the technology the company are building long term going to be independent, large corporate, right?
Yeah.
Versus you got this merger acquisition offer on the table, over $1 billion all cash, and also be able to be integrated into a larger platform and distribute your technology through their super powerful customer network and double, triple, even more than that of your existing customer base and revenue flow, and impact more people with your technology. Exit-wise, financial-wise, that may be a better choice. And also in terms of the goal of driving more impact of your innovation might be a better choice. It just, you don't have the moment of, okay, I listed my company, I got an IPO. So I think that's a really very practical questions founder need to ask themselves and making the right decision. So for us, the good thing is we have lots of exit, but we have diverse exit. We have merger acquisition, we have IPO. So I think we're helping founder make the right decision based on how fast company grow, what is potential upside of the market, what is the opportunity there. For a certain company, we just encourage them to continue, grow the revenue, stay private until IPO market open up, because they have potential to not only be a $10 billion company, but potential $20 billion or even more. For other company, we're like, okay, probably this is a better route because your revenue number could quickly double versus the other one, maybe they're making $2.5 billion ARR already. We have company doing so.
No, and I think that piece of advice and that lesson is so fundamental, because I think a lot of people are looking at their own selfish kind of, like you said, ringing the bell, but they're not looking at the long-term health of the company. But also, and history does repeat itself, right? So when we saw the IPO market be really high and everyone was IPOing, it then quickly cradled to the SPAC market. And the SPAC market drove these, in my eyes, in my opinion, higher valuations, but then the company took a hit as soon as it went public, and the value of those companies fell drastically. And then those companies had to respond to their shareholders and their investors and the like. And a lot of them either, folded, or they really had to sell for a number that was very much below value. So there's these paths to success. And I think a lot of people are stuck on the traditional. And I think there has to be more stories of what you just said of, mergers and acquisitions by companies that make that merger and acquisition look like a win-win for everyone. And people are more comfortable with accepting those offers. The offer that you mentioned, $1 billion cash on the table sounds amazing. But again, maybe the person is back to, being stuck on a valuation that they thought they deserved $2 billion, right? So it's that what makes sense long term, and do you want to be a part of that bigger growth? The mathematical concept is, do you want to be a big fish in a small city or a small fish in the big city, right? So it's kind of that same concept, but with that comes a dollar in your bank account also, and looking at it to say which part of the long-term equation do you think is going to grow better. And I think that's a really good lesson for everyone listening to Lu. It's, she is over 100 portfolio of companies. She knows what she's talking about. So when you're looking at what you should do is consider all the options. There's not just one option on the table most of the time. And also there's many untraditional paths you can follow that companies don't even sometimes consider because they're so used to an IPO road that they're not considering the other paths to success either. So obviously Fusion Fund is four funds now have been created. And I know your answer before you say this, but I want everyone else to hear the lesson here is, what's the success that has enabled you to be here for 10 years? And I think one of the things that I love that you have said to me, and I'll just start off and let you continue, is you said stick to the strategy. What was your strategy when you said, what is it that we're going to do that's going to be different from what everyone else was doing?
Yeah. I think it's more about build up the strong conviction of the strategy and also methodology of on one side and the surface, you will see that it's a sector focus. We have a strong conviction on the sector we've been looking at. Also, we have a strong domain expertise and industry connection to really know what are the true opportunity for the three vertical we've been focusing on. But under the surface, it's more about how we really go through the analysis process to really identify the right opportunity. That playbook, that methodology has been consistent. For example, we recorded an industry research report. And for example, recently there are lots of discussion about quantum computing, right? We actually look at quantum computing since 2017, and we did an industry research report. We identify key player, technology progress, etc. The conclusion is not ready for commercialization in the near term, so we shouldn't invest. Recently, we refreshed the report again. Seems like there's some good progress, but the key challenge and the key roadblocker is still there. And also conclusion is not investable within the near term because we're a 10-year fund. We're not like 20, 30 years fund. And also, Jensen Huang from NVIDIA recently also say that, and kind of causing some interesting discussion among different players. So that's also how we really conduct our in-depth analysis internally, look at technology, whether tech is ready, look at industry, whether industry ready to pay, and also look at a key player and draw the conclusion whether timing is now or later. I feel for investment, number one thing is all about the timing. It's not necessary, whether you choose the right trend, it's whether the right time with the right technology and go from there. You also mentioned AI being here for a long, long time, more than 30, 40 years. And why now, right? Why a couple of years ago we started allocating into AI? It's not only because technology is ready, it's because the customer, the large corporate, are willing to pay. They're ready for integrate AI to push for digital transformation. We start to overwhelming by all this data, but which is super valuable data and also valuable asset we could potentially leverage. I still remember metrics, I think 30% of all the data in our human society are related to healthcare. Only 5% of it are being using analysis by technology AI right now. Think about if we can use 100% of it, how much benefit we can get as an individual, as a society, for early diagnostic, personalized treatment plans, therapeutic solution, digital biology for healthcare, food industry, chemical industry. Things could be very different. Space industry right now, it is booming with all this lower cost of the launching services, and also the satellite will be able to gather tons of high quality space data and also satellite data. We need a super powerful tool to help us understand it and build up application, which is AI.
Selfishly, I'm looking for affordable healthcare one day.
Yeah,
to the fact where,
of course.
you know,
not only affordable, but also personalized. You know, my understanding of longevity is not living up to like 200 years old. It's more about we still live up to 100, 120 years old, but with a very strong physical strength and also clear mind. That's the goal of the future of the healthcare. It's the quality of the life. We want to improve the quality of the life with more personalized, affordable healthcare solution and other things. With our daily life, same thing. How to improve our efficiency. You're kind of a creator, right? As a content creator, how to enable you to focus your intelligence on the core content and all this logistic stuff taken over by technology, improve your efficiency. We built an AI analyst, ADA, since 2018, which is a big push for team morale. You know, we're still very busy, teams still working very hard, but I feel like most of the time they spend is on the super valuable and intelligent task. All this like data crunching, searching, organizing could be thrown into AI and ADA to work on it. Anyway,
data transformation
to go back to your original questions, I think it's very important to have strong conviction of the sector and also have strong conviction of your consistent methodology. And the more important thing, I think, as an early stage investor, chasing after buzzword is not necessarily a good idea, because when you're chasing means you're not leading. But if you want to invest in good company, you want to be ahead of the curve a little bit, you have to be a leader instead of chasing who already been talking about it on the market.
Yeah, and I love that. Chase, don't chase, but lead. Quote, because I think it is absolutely right in any type of investment that you may want to do, but especially in the AI world where, you know, I think in the next 5 years there'll be many companies that are just going to copy and paste what other companies do, and they're going to be chasing what is the new sexy thing, but they're not going to be leading, right? They're not going to be the leaders in innovation. And I think there's going to be a lot of needed due diligence to be done to really say, are you really innovating or are you just copying? Right? And I think there's going to be a lot of copycats out there that say I have something different, but it really is the same company except with a different name. And I think that due diligence is up to investors and capitalists like yourself to say you're not worth my check. And I can see I'm waiting for the right company to come in and show me that they're leading and innovating, and not just copying, you know, the 10 other companies that already exist. What lessons in due diligence would you tell companies that if they're someone that wants to have you as a capital investor, what should they do that you expect them to have done before they even come to your door and say, hey, would you look at us?
Yeah, so for us, we're looking at super early stage company. Most of our investment is in the seed round. So our expectation for seed round company is you have a working product, you have some early market validation. Not necessarily has to be a revenue, could be pre-revenue, but have a clear path of existing discussion with potential customer, and the customer and also target market show very positive signal that they wanted to adopt the solution. And meanwhile, we're looking for a founder has a long-term vision, has also clear planning of the execution plan. You know, with a startup, lots of things couldn't be done at once, and it will take time. But execution plan, clear thinking is very important. That's what we call the leadership. But if for company are in the pre-seed stage, you know, that's super early. We're okay. We look at a pre-seed company as well. But when it's a pre-seed company, we probably are more picky on first market momentum. Are you the leader in this market, unique market opportunity, and also choosing the right market timing, and also it's a potential big market size. The second thing is the quality of the founder itself, whether it's a top-notch founder. We're very fortunate to be able to work with a ton of the repeating successful founders. So we have lots of the founders in our portfolio. They are serial entrepreneurs. We also have our super founder network. All of them are repeating successful founder. continue working with us and that still flow. I think for this type of founder, we feel more kind of confident when they just get started because they know how to do it. For other founder, if we're not knowing them before they start this venture, we'll probably also want to see a little bit more validation. But in general, we like to talk to founder even before they fundraising. We're very friendly and supportive to founder. We actually host a founder office hour every quarter. It's on our website. It's access everything. It's like 10 to 15 minutes per company. My team will just host office hour. You could ask even you feel like stupid questions, no problem. We'll really respond as a former entrepreneur to share our experience, share our insights, share our feedback, to help them prepare. And also build up the relationship understanding, support them as needed until the point they think, okay, we're ready to fundraising. And also want to talk with Fusion Fund, then that will be naturally starting point of our engagement.
So it's like the pre-interview to the interview.
Yeah,
that's awesome.
I joke about it's like a dating process.
Yes. It's you want to have a coffee first?
Yeah.
Before you actually go and spend money on a dinner. I love it. So 2 more questions for you. Where do you think the space is going to be in the next 5 years?
You mean for the venture in general?
Correct, venture space.
I think looking back 10 years ago when I started Fusion Fund, at that time I was initially start really as a GP solo founder and eventually build up the team till now. I think we had a name for this type of fund manager called emerging fund manager. Or even diverse the fund manager, micro VC. I think after 10 years, we're very lucky, launching new fund, getting continued success of our portfolio and also the track record. I saw more fund manager like us grow up to the mature stage. So in the next 5 years, I'm actually really, really positive. Think we have very promising of the dynamic of the ecosystem because more diverse the background fund manager is in the game right now. No matter it's the diverse background in terms of the technical focus on industry background, but also who we are, right? This is now bringing new opportunity to founder side. Founder who are focused on relatively new area, more deep tech sector focus, more healthcare focus, or even female founder, or immigrant founder. I think this is changing a lot compared with 10 years ago. And also as an emerging fund manager, we're kind of like graduating from emerging fund manager. I was joking that we feel like high school graduates, not teenager anymore, but still fresh and ready for college. And we're full of energy. We're kind of like a Series B round, C round startup. And our goal is to continue hyper growth together with our founder. And I think we're not the only one. There are tons of other VC around similar stage or even more advanced than us. And we're going to bring lots of new power, energy to this ecosystem and create a more dynamic funding environment for founder.
I love it because you touch upon something that I have an acronym called the H.E.R approach. And it's hard work, energy, and results. And I found these 3 to really be a success formula for people who are either, a business owner, entrepreneur, you name it, or even just an, employee working for someone, that if you have these 3 habits, that you're going to succeed. And I think especially in this venture world, energy is so important, right? It's that pitch. It's that show me why you're different than someone behind you. And why are you different, right? Like you have to have that elevator pitch really well, but also to your point, it has to have a strategy and a long-term execution plan behind it, right? Like you may look wonderful on paper, but is your execution plan correct? Like, do I believe in your execution plan, and do you have the right steps to ensure that execution plan gets results? So I'm really excited for where this will be in 5 years. I think I'm only saying 5 because I think so much will change. That to think about in 10 years, I think is a little bit too long of a term. Obviously, everyone wants success, but at the same time, I think in 5 years, there's going to be so much more innovation that we're just going to have to figure out what that 5 years and the synergies of what happens in 5 years will look like. So, Lu, we're going to wrap up here, but I want to ask a little bit, 2 more questions after for extra content. So thank you so much for bringing your lessons and sharing them with us, because I think for all of you listening, whether you're entrepreneurs, whether you've already done a business and exited, or whether you're just starting and you're in that high school age, Lu is an inspirational story. She is absolutely one of my favorite people because she's proven success immigrant story. She did the hard work. She went to college. She got the degree. She built a company, sold it, and now is part of a unique network. And she's a woman on top of it all, doing it among 99% of men in Palo Alto, in a very, cutthroat scenario where there's not many women in her region to do what Lu does. So for all of you, I always say, see it, be it. And Lu is that success story to see it, be it. And one day, hopefully, you will have people come up to you and say, Lu, I just wanted to be like you. So thank you, Lu, so much for your inspiring lessons and for joining me today on the Top Lessons.
Thank you very much for having me. And I look forward to keep the conversation going.
Me too. Absolutely. Thank you so much.